Hi everyone and welcome back to Grumpy Monkey Trading. My name is Michael. On the show today is another We Are the People, where we take suggestions from you guys, the audience, on stocks that you'd like to see more of, a deeper dive analysis. And for those practicing charting, you get a bit more of a educational run through for some of these stocks. So we have a couple on the docket today, so let's get it started. All right, so our first viewer-requested stock was Walmart, which has experienced a bit of a resurgence lately, particularly in some of the difficult times of the market of the last week or so. However, analysts are still very much on the fence for Walmart, with 20 holds, 3 sells, and 4 buys. So we have a pretty even spread, although most recently we had a buy in the 70 region. For some interesting stock twits, we have strong during market turmoil, weak during bounce, interesting. Which is kind of how Walmart is when there's trouble a-brewing, particularly in the economy. Because if jobs are feared to be lost, what better place to buy milk and cheap clothes than Walmart? So people view it as a safe stock. I think it also caught a bit of a bump before the China trouble, just based on some of the gun legislation, selling ammunition and guns as well. So I think that did give it a bump. So that's an interesting comment. RMB Cap says, looks like a bull flag is setting up on the daily chart. We're going to check that out in a moment. And ESDA Trud says it looks pretty safe for $40, bearish, which I think, once we start to really get into it, is a very ambitious bear signal for sure. So let's take a look at these charts. We have the weekly, where we had a very long, pronounced downtrend over the course of 2015, which we've recently busted out of, and busted out of in style with huge volume. So you could say, as per that comment, strong during the turmoil. And now we're sort of figuring out where we're at. So we're in that fluffy territory. Now, normally when you bust through a major resistance line like this, you're going to settle on one of the other support lines, most recently busted support lines. And then from that, you would rise with volume as a confirmation. So right now we're kind of in limbo land between the upper boundary of 68 and some of that 60. We haven't come down yet, but the whole market is really taking a bit of a kicking. So there could be more positive momentum to come. If we look at the daily, we can see that we like we saw before, we busted out of that trend line and now established a new set of channels going upwards. And we broke through those even very recently. So that was the one that really got popped out a few days ago. And now are forming what that fellow said was a bearish flag. Now on the daily, it could also be interpreted as a bearish pennant. So the difference between those is a bearish flag is more of a wedge pattern coming off of an increase, whereas or at least a descending trend line, or channel, I should say, whereas a pennant is more of a symmetrical pattern after, so a symmetrical triangle after. Now this could be either. At this juncture, we'll check on it we'll check on it in the hourly, but we do have falling stochastics, I should say, and we are pressed up against this support line. So if we were to break through that support line, we would take a run at 62, and we could, if that had a lot of momentum, even challenge some of these intermediate support lines to take us down to where we started the trend at 60, and build off of that potentially for more of a positive run. But so far we've found just positive things. Now if we look at the 2-hour chart, we can really see that it is a flag, as that fellow mentioned, and not a pennant, because it's more of a descending wedge pattern. So lower highs and lower lows. So these tend to break out for the positive. So that would indicate, as opposed to falling back towards the original support lines, we might break through this upper resistance and then start establishing even newer highs off of this. Would be sort of the trajectory that we would go on. If we return back to the charts, then we can see that on the weekly we've broken resistance at 60 with volume, which is great. 68 is the next resistance and no retracement confirmation yet. So we really haven't fallen, except on that hourly chart where you can see that we've fallen back to that original breakout. Sitting on the resistance line in daily and break support, then it could hit 62, but we have that potential bullish flag pennant. And then 2 hours bullish flank is very apparent. We see that if it can break out of that, that will be very positive. And certainly if it plummets below, then all no holds barred at that point. But overall, I would say that we are looking like more that we will resume the positive trend than we will have that retracement back to our original resistance break. All right, so our other viewer requested stock was Skyworks, SWKS, another one with a lot of analysts sitting right on top of that fence with 20 holds, 3 sells, and 2 buys. Most recently lowered targets down to 85 and 110, experiencing a bit of a downtrend at the moment, looking for a bit of a resurgence. From StockTwits we have Jesse Sling saying if it breaks down again, this is confirmed downtrend. You have his chart, upper resistance levels here and here, and certainly this downtrend that we're experiencing. He is thinking that if it shows confirmation again, perhaps falling even farther, that would be a confirmed downtrend. Then we have Mike A saying great company in a booming industry, but big funds liquidating to raise cash. Can't buy until the sellers are done, so have some patience. So let everyone get the selling out of the way and then ease yourself back into this stock. Let's look at the charts. So on the weekly, looking at about a 3-year spread here, we can see this huge run up and now this big downtrend pressing up against this lower support line and with a subsequent second dangerous support line below it. I don't know why I did the air quotes. But certainly that would be the lower of the lower targets. We also see that if we draw the Fibonacci lines, that we have a 50% support line that we're conveniently sitting on. Like Humpty Dumpty, we hope that we don't fall off of it. So I think at this point on the weekly, we're showing that we're at a comfortable resting point, indicating by some stability in the RSI relative to historical lows, relative to stochastics, which is now deeply oversold and doing the little hook thing that if you pay attention to these podcasts, videocasts, whatever you call it, YouTube video, these are things that I certainly look out for when it hooks around unnaturally. Looking on the daily, we are in this nice, long, descending trend channel pattern pressed up against another support line and just bouncing between it. So you would say at this point that we have many oversold signals to follow in the daily. We have plunging RSI below historical norms for recent memory and hooking back. We have stochastics that are now breaking slightly upward but still oversold. We have a recovering CCI, which is a indicator of a reversal of a downtrend, at least on the daily. And you can't see it because I can't scroll far enough, but there's a money flow index that's also in oversold territory. So daily is showing across all the oscillators as oversold, and we're sitting at the bottom of a channel, which indicates that at minimum we're due for a short-term recovery. Now if we go to the 2 hourly, we can get a bit of a better sense of what sort of shape that recovery is in. So we have a descending wedge pattern. So we have a channel that's kind of coming together. Typically those do end up in a bit of a reversal. I mean, you can see here today that we plowed through that upper resistance line with some volume and held it through the candle. So we're not resting the top of this close candle on the boundary line. So that's a positive for the short term. Our stochastics are indicating kind of a reversal level, but in the middle. So that's kind of just a blah area. And our RSI is recovering as well. So it sort of indicates that we're due for a recovery in the short term, but whether that recovery is sustained is uncertain. So certainly if we broke down again, then that would be confirmation of a much longer downtrend for this stock. So I could see us certainly challenging kind of in this region, in the certainly this short term, so getting another few dollars at it, another couple bucks maybe added to this pattern, but if it can kind of break out a bit and close this gap, then you could be in for a nice little bump. So going back to our slides and stuff, we see on the weekly that we're resting on the 50% Fibonacci support, which is generally a fairly strong support level, and we have oversold stochastics. On the daily, we're showing oversold pretty much across the board. And for the 2 hours, we have a small breakout from the bearish wedge pattern. If it goes back into that pattern, then that would be a bit of a downtrend. But again, we're showing some oversold signals there as well. So I'm expecting at least a short-term recovery for SWKS while the whole market kind of figures out what the heck is going on. So that is my We the People show for today. I hope you've enjoyed it. Please like it, share it, comment on it. Offer new stocks that you would like tackled, offer your feedback on these ones. Maybe you have your own personal opinions about these stocks. Put those in the tap those into the comments below. And I hope you have a good, a great rest of the week. So take care.